Hey, I'm Jusko from ProbMoney.com. In this video, we're going to talk about whether credit unions are better than banks or vice versa. What is the difference between the two? What are the pros and cons of each? But before we do any of that, I'm going to ask you to please subscribe to this YouTube channel if you have not already. And if you have already, I thank you for doing so. So most people, I think, probably start out their banking careers with a bank. So either a smaller community bank maybe, or one of the very big name banks. It is very easy to open accounts at banks, and so most people probably start there. But somewhere along the line, they kind of learn about these mysterious credit unions. They're not quite sure what's going on there, and then they'll talk to somebody who really loves their credit union. They're like, oh my God, my credit union is the most amazing thing. And then they're like, oh, maybe I'm missing out on the credit union thing. So then you start to wonder, are credit unions actually better than banks? What's the difference between the two? Why do they have this weird name instead of just being called a bank? And so that's what we're going to talk about in this video. So banks and credit unions both offer the same essential things, but they have sort of different ways of doing it and sort of different motivations for how and why they offer the services they do. So they both are offering you sort of the general banking financial services that you would think about: savings accounts, checking accounts, auto loans, mortgages, credit cards. Now, not all banks and not all credit unions are going to offer all of these things, but basically what you would think of as the basic bank stuff are going to be both at banks and credit unions. Now, on the banking side, you're probably more familiar with that. You go into a bank or you go online to a bank's website and you can very easily open a savings account or a checking account, or you can apply for a credit card. You could even apply potentially for a mortgage loan through that website. And the way a bank works is they are offering those services to you. You are a customer, and as long as you either, deposit your money or you pay your bills on time, they're not going to give you a hard time about anything. Maybe you will get a nice, interest rate on your savings account. Maybe you'll get some good rewards on your credit card, whatever. But in the end, the sort of a relationship between you and a bank is bank customer. They are on one side, you are on the other. It's almost like a retailer and a customer, same thing. It's just financial products instead. And this is important because banks are businesses, and businesses are in it for the profits. And so banks are trying to make a profit off of you. And the bigger the bank, the bigger the profit motivation, especially as you get into banks that are big public companies and have shareholders who are very demanding in terms of wanting to see bigger profits every single quarter. And so what that means for you is sometimes they have financial products that you really like, but they also will do whatever they can to squeeze that very last dime out of you. There may be hidden fees, there may be mortgage products that are structured in strange ways that you don't quite understand that they try to push on you. They may even go so far as in the disgraced Wells Fargo to open accounts for people that did not want those accounts and did not even know those accounts were open, because there were sales incentives to have more accounts opened. So because banks are profit centers, they are not necessarily on your side, even if they do everything they can on the marketing end to make you believe they are on their side. And again, the bigger the bank, probably the more you want to be concerned about these things. Your smaller community banks, probably a little less profit driven, don't have as much demand to drive profits, but your bigger banks, more of a profit motive. Now, while credit unions offer the same stuff that banks do, they're actually a very different animal. Number one, they are non-profit organizations, which means after they have covered their costs, the cost of all the loans and those sorts of things, and the cost of their employees' salaries, that extra money gets plowed back into the credit union for the good of its members, whether that means higher interest rates on savings, lower interest rates on loans, or whatever. It all is supposed to go back in order to make life better for the people that are part of that credit union. Now, when you become part of a credit union, you are becoming a member of the credit union. You actually have to apply for membership and be allowed into the credit union. And the history of credit unions is that generally the people that are allowed to be members have some sort of commonality. That may be geographic. They may live in the same geographic area. It may be employer-based. They work for a large employer who started a credit union in order to help out the finances of their employees. Could be a large university or school district. whatever. There are many different ways that credit unions get started. Credit unions can be extremely small, or credit unions could be extremely large. So when you become a member, you still are supposedly sort of part of the community of regular members. Now, credit unions have gotten a lot more loosey-goosey, at least some of the bigger ones, in terms of who's allowed to be in that credit union and the way they are allowed to get into that credit union, but that's the idea behind them. All right, so we've got these credit unions that are made up of people in our community. They're going to give us better rates on our savings, lower interest on our loans, all sorts of great things. Why would we not join a credit union and become part of that credit union and just say no to the banks? Well, one of the reasons you might choose a bank over a credit union, and especially if you chose a bigger bank over a credit union, is more of a feeling of dependability and confidence in the fact that you're going to be able to access your bank account and kind of get what you need from that bank no matter where you are, no matter what time it is. So if you have a larger bank network, you've got more branches, maybe you have easier access to ATMs, you go someplace you know you're going to be able to contact them easily, maybe they have longer customer service hours, whatever the case might be. If you're thinking of a big bank, oftentimes you think of them as sort of being there for you more so than maybe you would a credit union that might have shorter hours. They might have an ATM network that is a little harder to access. They're not going to have branches if you go outside of your geographic area oftentimes. Now, there are small credit unions and then there are huge credit unions like Navy Federal Credit Union, so they're not all the same. But anyway, those are the sort of the things that you would often think about. Like, banks are easy. It's sort of like going to McDonald's. You know what you're going to get. It's going to be sort of dependable. Maybe it's not the best thing out there. Maybe you could look around and find something better, but you know what you're going to get. You know it's going to be around every corner. And so sometimes the big banks offer a little confidence and security and dependability that people don't always feel with their credit union. The second thing that might make you go to a big bank versus a credit union is selection, the number of offerings, the types of offerings that they have of the various products and services. Many credit unions are going to be somewhat bare bones in terms of the number of things they can offer you. They might offer you better rates on some things, but they might not have as much selection. So you might go to a bank and there might be 3 different types of checking accounts, and one of them fits your needs better than the others in terms of, you know, the interest it provides or how much of a balance you have to keep in or whatever, where the credit union might be, here's what we got, and that is it. So that is something that sometimes people are going to like better about big banks, that there are maybe more things going on in terms of selection, maybe more innovative products as well that they would be interested in. Sometimes the big banks can sort of feel like the big city, while credit unions can seem like the small town. Now, again, that is not true across the board. There are small community banks that feel small town, and there are big banks, and then there are small credit unions that feel very small, and then there are huge credit unions as well. But in general, oftentimes we think of the banks as being a little more sophisticated in terms of the numbers of their product offerings and the types of selection that they have versus credit unions. And then the third aspect of why you might choose the bank over the credit union is sort of a combination of the first two, and it comes down to competition. The banks are competing against each other. They are very profit driven, and so they are trying to get as much money as they can out of you, not only get you in as a customer, but see if they can sell you more and more and more of what they have, whether that is loans or having you deposit more money with them, whatever the case might be. They are constantly trying to innovate and figure out what is going to make you happier. So they're out there saying, look at our extended customer service hours and our millions of branches and our ATM networks and these crazy credit card rewards that we're offering. And if you bundle your checking with the credit card, then we'll give you 75 free trades a month on our investing platform and all this stuff. So there's more and more and more, and because they are competing against each other, and your credit unions don't have to compete as much. Yes, they do compete with the banks in terms of whether they're getting money in or not, but they don't compete in the same way. They don't have the same motivation to make a profit. They don't have the same pressure to make a profit that the banks do. So I have an auto loan through a small credit union in my area. I actually got it when I did financing through a dealership, so it's not a credit union that I have a great loyalty to or anything. And it's almost weird to deal with a small credit union because you call in and sometimes you just get the same person on the phone. There's only maybe 8 or 9 people working there, and that's the whole operation, right? So that can feel a little disconcerting when you think about a bank versus a credit union like that. And I remember remember I had a problem not very long ago, and I called in, and the person that I talked to on the phone, who I talked to on the phone before, said, oh, well, that's Mark's department, and Mark's at lunch, he'll have to call you back. And for me, these days, what I expect out of a bank, when I call, I don't expect Mark to be at lunch and then no one can help me and I have to wait for Mark to get back. I expect that I'm going to be able to have somebody in customer service deal with what my problem is. And so when you talk about a bank versus a credit union, this is something that can come into play. Now, you could also make the case that, well, if you had a big credit union versus a small community bank, it could be the same thing reversed. But banks, to me, tend to be the ones that are a little more customer service oriented in terms of getting on your problem quicker than credit unions that, again, are a little less motivated to serve quite as quickly. I guess what it comes down to for me is this: yes, banks are for-profit companies and I don't always trust them, and credit unions are not-for-profit organizations, and so by theory they should be always offering you something better. But when you actually look at the two side by side and you think about what it is you might want, and you even look at the rates that they might offer you or the products that they have, you shouldn't think that either one of them is across the board better, and you shouldn't think that every bank is the same and that every credit union is the same. There are big banks, there are small banks, there are big credit unions, there are small credit unions. So joining a credit union and thinking credit unions are better than banks because they work for their members and so everything is going to be better, I'm going to get better rates, better service, all that sort of stuff is not necessarily true. So just like anything, you would want to shop around. Never assume that because you are with a credit union or not with a credit union that you are going to be getting the better deal when you take out that auto loan or that mortgage or put your money into savings or checking or get that credit card or whatever. That's it. If you have any questions or you have some thoughts of your own experiences with banks versus credit unions, I'm sure I'll hear from some of my Navy Federal Credit Union fans. They seem to have a big fan base. Put everything in those comments below and I will try to answer them, and perhaps you will help someone else out there in the world as well. Thank you for watching as always, and please go to proudmoney.com where we do credit card reviews, we talk personal finance, we talk deals, and all sorts of other fun stuff too. Thanks for watching. Bye.